Hey, everybody, welcome back. My name is Ortez, and this is Travis. And today we're starting a new series called Terminology Tuesdays, where we're going to break down two different mortgage terms that you should know. Today, we're going to talk about the difference between mortgage insurance and homeowners insurance. So grab a pen and a piece of paper and your favorite beverage, and we'll be right back to get into that. All right, ladies and gentlemen, we are back and we're going to go ahead and get started with breaking down these two terms that we discussed. So, Travis, my main man, tell the people what exactly is mortgage insurance and what that means to them.
Well, without getting too deep into it, we all know how certain fantastic comedians like Chris Rock feel about insurance. If you don't know about that, maybe we'll link that video another time. But essentially, mortgage insurance is insurance for the lender. Okay, don't ever really get it twisted. The most important piece for you to understand about mortgage insurance is it's essentially the cost to play the game if you enter in with a certain type of loan or another type of loan with less than a certain amount down. Those goals and those aspirations that we have to one day not pay mortgage insurance aren't oftentimes the things that we're able to do as first time home buyers. So they've become a necessary evil in the market today.
Okay, awesome. And then I don't want to get too deep into it, but kind of tell the difference, tell the people the difference between, because there's two different type of insurances, right? There's one called PMI and there's one that's called MIP. So if you wouldn't mind, take about 30 seconds to kind of break down the differences between the two so the people know.
Absolutely. You hit on it. PMI, MIP. It's honestly the same thing. The only difference is the product in which it's attached to. All right. You're going to see MIP attached to FHA loans. You're going to see PMI attached to conventional loans. Um, most most people are not going to really truly notice any difference in those. I can tell you that recently FHA's made some different, some impactful changes to their mortgage insurance premium, and they've actually lowered it. So we're going to see more and more FHA buyers in the market because it's going to make more sense for them to have that lower mortgage insurance premium. PMI programs for your conventional loans, those can be discounted for first time home buyers. Those are absolutely going to be driven by your overall qualifications, i.e., credit, things that we've talked about here on this channel in the past. One of the most important things for you to understand is that your broker is essentially going to be making decisions based on an overall payment. That overall payment is what's the most important thing. We try not to get you too lost in the mortgage insurance world, but it's absolutely important and a part of your payment. That's why we always look at an overall total payment to help to guide the client.
The only thing I would probably add to that, Travis, would be in regards to the duration in which MIP and PMI are on the loan for the mortgage that you have. Correct me if I'm wrong. With the PMI on conventional, you can request that to come off once you become 80% loan to value, and it automatically falls off at 78%, right?
Absolutely. Most important thing to note there is that you said request at 80%. That 80% will typically be of the original sales price unless your servicer allows you to get a reconsideration of value, right? So we're making that request. Let's just say for even numbers, we're purchasing a home at $500,000. That means that 20% equity would be $100,000. So if I reach $400,000 as my loan balance in that situation, I may request to have that removed. If I don't make that request, when I reach 78%, the lender is required to remove that from the payment. Okay, so keep that in mind. I mean, that could be the difference between, I mean, that could be months, guys. So, like, let's make sure that when we are purchasing, we are keeping an eye on our equity. Don't be afraid to reach out to that servicer and ask to have those things removed. There's a huge difference in the way that conventional will terminate automatically. Most of your FHA buyers, because they're not putting down more than 10%, most of your FHA buyers are going to pay mortgage insurance for the life of the loan. Now, keep in mind that most of your FHA loans, we don't consider them to be lifetime loans. So you're going to be refinancing out of that most likely, anyways. But that's absolutely an important key factor. There's 100 different reasons and 100 different ways that everybody's situation will be different. That's why we always encourage you to reach out to us directly so that we can talk about your specific situation in depth.
Okay, awesome, awesome. And then I don't want to get too far down the rabbit hole, but the in regards to MIP, 30-year mortgages, if I'm not mistaken, they're on for the life of the loan, and 15%, 15-year mortgages, I believe, do they still come off at 80%, or how? I can't remember the exact term. Break that down for us.
So there are products that come with like an 11-year cap, a 15-year. You're more likely to have an 11-year drop off point. However, depending again on how much down payment you put, you could still have it for the life of the loan on a 15-year FHA loan. But again, that's one of those case by case basis. So you want to make sure that you're checking with us or your favorite mortgage broker to make sure that those items are flushed out before you close on your new loan.
I guess we will move on to our next topic. And what was the next topic again, Travis? Remind me.
Yeah, Ted. So one of the things that I run into a lot, and you can tell me if this is the case for you, is people see the word insurance and they automatically assume mortgage insurance. But there's also something called property insurance, hazard insurance, or homeowners insurance. So why don't you tell us about that and how it kind of comes into play with your mortgage?
When it comes to homeowners insurance or hazard insurance, this is basically the insurance to protect your home, right? So we don't want to get it confused with any flood insurance because that would be separate depending on if you are purchasing a house in a FEMA area, designated flood zone area. Obviously, that will be something that you and your mortgage broker will look over as far as where that property is. So make sure when you have your realtor, you're looking at homes, if that is the case, that's something that's completely separate. But we want to focus on the homeowner's insurance part, and that's basically the insurance to protect your home, right? And what really comes into play is that's one portion of your PD payment, so your principal, interest, taxes, and insurance that you'll be paying. All right, and it comes with an annual premium. Now, that annual premium can be affected by a multitude of things, right? A couple of the factors are your coverage options, the desired amount that you want to have covered for the property, the home condition of the property that you're actually buying, what building materials are being used for that property, the local crime rate in your area, as well as the neighborhood, your past claims. So if you've ever had homeowner insurance in the past, that will play into a factor as far as what your annual premium is. And what most people don't even realize or don't consider, your credit score is also a determining factor in regards to your homeowner's insurance. So it's kind of a twofold thing to whereas, when we talk about, credit on this channel, we always say like, hey, for the loan purposes, having the best credit profile helps you in a multitudes of ways. It helps you with your insurance for your home as well as with the loan itself. So that's another factor that most people don't realize. Now, I'm no homeowners insurance expert. These are just a little bit of the things that some of my trusted homeowners insurance agencies have told me are play a factor. So ultimately, at the end of the day, when you're shopping around for homeowners insurance, rule of thumb, probably always look at about three different homeowners insurance and get quotes on, and really dig into that. What's covered? What are my options? And what is affecting my premium in regards to that? So I think that kind of wraps it up for homeowners insurance. Did I miss anything, Trav?
I mean, one of the things that I've always advised my clients on when it comes to the homeowners insurance is that similar to what Tez and I do for mortgages, there's a lot of insurance agents out there that do the same thing for insurance, and that is they act as brokers. Um, Keep in mind that a broker might be able to do those multiple quotes that Ortez, so I mean, he absolutely hits it on the head. You need multiple quotes. So sometimes going to a broker is what's best for you, even on the insurance side of things. So if you need a referral to an insurance broker, let's just say you're happy with your mortgage where it's at, but there's something else there that we can offer a savings, reach out to us, give us a shout. We can help and guide you in the right direction. Like Tez says, We're definitely not insurance people, but we know plenty of fantastic insurance people to connect you to.
Awesome, awesome, excellent, excellent. So, the one last thing I'll add in regards to insurance, also ask your insurance agent if it's smart or what kind of discounts or benefits you may have when you bundle, auto insurance with your homeowner's insurance. Any benefits regards like some employers offer insurance benefits. So really dig deep and ask those questions of your insurance person to see how you can maximize getting the best premium when it comes to your homeowner's insurance. Okay. I think, like I said, I pretty much touched on it, and I think that'll wrap us up here for Terminology Tuesdays. So, as always, my name is Ortez. That's Travis. And if this information was valuable to you, please make sure you hit the like, subscribe, and the bell notification for every time we upload new content regarding this mortgage knowledge. So, on behalf of me and Trav, we're favorite LOs. We're out.